This is why I'm so fond of the term logarithmic decay. Little by little by little by little, but bang, all at once. We're right. The little by little by little by little is happening all around us. Metal accumulation, lack of bond purchases, moving away from the dollar, building an infrastructure that encompasses the majority of human population. All of these things are happening. What does that say to the rest of the world? It says that there is a quiet shift slowly away. And gold, in my opinion, is being remonetized. It is being reintroduced into the monetary system as the anchor to it. And that's why the U.S. is accumulating it. That's why they're accumulating it. That's why the Shanghai Exchange is building hubs all around their ecosystem to support this new endeavor.
Global USD reserves have quietly slipped from 72% to just 58% over the past 2 decades. That's a big deal. It signals a shift in confidence. Meanwhile, gold and silver are stepping up as alternatives that can't be easily frozen, sanctioned, or manipulated by any one country. In 2024, central banks bought a staggering 1,045 tons of gold, marking the 3rd straight year of over 1,000 tons. This isn't just about portfolio diversification. It's a strategic shift. Countries like Poland, 90 tons, Turkey, 75 tons, India, 73 tons, and China, 44 tons reported, are leading the charge. And the trend is accelerating. Q1 2025 saw 244 tons bought, the strongest first quarter ever. At current prices, central banks are soaking up $5 billion worth of gold every month, with total annual supply, mining plus recycling, at around 4,800 tons. They're now absorbing over 20% of global output, creating absolute scarcity that's helping drive prices higher. Silver's story is just as compelling. Its dual role, as both a precious metal and a key industrial input, is gaining steam. Global industrial demand is up 8% year over year, driven by booming sectors such as solar panels, electric vehicles, EVs, and 5G infrastructure. Meanwhile, central banks are also quietly buying silver. Silver ETF inflows are up 12%, and China's silver imports rose over 20% in Q2, a strong signal from the world's largest industrial consumer. Andy Schectman puts it well. Who's buying all this gold and silver? What do they know that we don't? It's a fair question. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest update.
Any discussion about gold and silver without talking about the BRICS now is a mistake. And a lot of people would say, well, the BRICS is old news. I want to get to that later on, because I think that there are some developments, Danny, that have happened within the BRICS framework that I haven't heard anyone talking about but me, about one thing that changes everything. I want to come back to that. I think the thing that I've been focusing on the most, really all year, has been the amount of gold that's been coming in to the United States. Now, we know that countries like China have been buying gold. In fact, they expanded their gold reserves for the 7th straight month in May. But that's happening all around the world. And that's something that should certainly not be ignored. But what's happening here in the United States? And when I mention gold, I mean silver too, which, by the way, is up over 45% year to date, which is outpacing everything in the metals complex. But when we talk about gold, to see the amount of deliveries coming into COMEX, and really no one knows who is behind it, is something that I think needs to be really contemplated in the respect that, as an example, the May gold contract and silver contract. The May gold and silver contract were the largest deliveries into the COMEX market in history. And this is just kind of a repeat, if you will, of everything that we've seen since really November, where month over month over month over month, we continue to see huge inflows into the COMEX market. Now, this is ridiculously different than anything that I've ever seen in this industry, ever. This never happened before in this industry. As a result of futures contracts normally settling for cash. Now, all of a sudden, you're seeing these futures contracts settle in for delivery. And that's something that, 8.5 billion, if I'm not mistaken, in gold was delivered into the May contract. Now, these are things that, forever, you would see maybe 1% of contracts stand for delivery. Not the sheer amount that we've been seeing, which is off the charts, and it's continuing. We've had somewhere north of 35 tons of gold stand for delivery since Easter of this year. And I think what we're really seeing is that private wealth is moving towards assets like gold and silver with no counterparty risk, and that's why they are standing for delivery. To me, that's the biggest thing, Danny, is that we're seeing a global rush, whether it be bleeding dry the LBMA to where they have to go to 8-week delivery delay from T+1, T being the trade day plus one settlement, the third day your metal should be moving, to T plus 8 weeks. A draining of the Shanghai exchange, where Chinese are promoting their citizens and prodding and encouraging them to accumulate gold and silver through state-sponsored gold and silver projects. So they are actually pulling it out of the Shanghai exchange, or the same thing happening on COMEX at a much bigger level, where the biggest money in the world, the most sophisticated money in the world, the most well-informed money in the world is standing for delivery. Now you can look at what President Trump said on Easter Sunday, a tweet on Truth Social and on Twitter, where he says, the golden art of negotiating, he who has the gold makes the rule. Thank you, whatever that means. You can point to Treasury Secretary Bessent, who said, look, there'll be a new Bretton Woods, a new monetary system within this administration. And of course, you can point to Judy Shelton, who on my interview said that she was told by Trump, and many people think she'll take over to run the Federal Reserve when Powell's tenure is up in the next few months, that she was told by Trump that he would issue gold-backed treasuries, 50-year duration to begin with, on July 4th, 2026, which would be the 250th year anniversary of the country. But, look, it's not just gold. We've seen somewhere in the neighborhood of 12,000 silver contracts stand for delivery just recently. And so we're talking, and you multiply those by 5,000 ounces. So I guess to me, the thing that really sticks out, Danny, more than anything, is delivery into the ecosystem. And the people who are doing this are not just the most well-informed, they're the most or the well-funded, they're the most well-informed. And people at these levels do not do this kind of stuff, do not spend this kind of money, where in March it was almost $5 billion, $4.5 billion for a client from JP Morgan. In May, the largest deliveries ever. This has been going on since November. Who's bringing all this in? Who's standing for delivery? And what do they know that we don't? Now, of course, the price keeps moving higher. You find that these players make these moves prior to the price moving, using the suppression of the COMEX market and the LBMA to their advantage. And there are those that think, like Eric Young, the King Kong on X, who believes the Chinese are doing the same thing with silver, shorting the paper price in New York and buying physical in non-price setting locations around the world to accumulate it at subsidized prices. They're playing the game, a long game, to drain the shelves. And I guess what I would say is that when players at that level stand for delivery to the degree that they have, there's something much bigger at foot than any analyzing would ever tell you. It's just simply these people don't make these kind of moves in a preemptive fashion without knowing what's coming or having a very good idea of where things ultimately go. And here we are looking at silver, where today
it's at like 36.75, I believe.
Yep, man, you got it. The futures are up $1, up 2.81%. So we're talking something's going on. And silver is now, this is the third time in history it's been this high, which is kind of crazy if you think about it. And when we get through this resistance in the mid 40 range, there's nothing standing in front of it. And I guess Vince Lancy made a great point, and he said, silver is where gold was, 18 months ago or however long ago before it started to make its move. And on a technical level, this long building, 45-year cup and handle base building, it's right at the mouth of the cup, about ready to break through, and it's right, breaking through that resistance as we speak. So, yeah, I think it's the action in the metals market that to me, along with deliveries, that is something that I pay real close.
Silver prices have reached a significant milestone, surpassing $36 per ounce in international markets, marking their highest level in 13 years during the previous week. Market analysts anticipate that the precious metal will align with gold's performance, supported by favorable technical indicators and increased demand driven by a weakening dollar. In 2025, international gold prices rose by 43.7%, driven by increased demand for secure investments amid Donald Trump's tariff policies and global political tensions. Silver has increased by 22.3%. In contrast, the Nifty 50 has risen by 5.7%, whilst Nifty Midcap 150 has grown by 3.6%, and the Small Cap 250 index has decreased by 1.3%. Since 2005, in 17 instances of reaching new highs, the metal has delivered average returns of 5.2%, 13.3%, and 26.1% over 3-month, 6-month, and 1-year periods, respectively. Andy believes the mainstream narrative is misleading the public, while the smart money is acting quietly. Despite silver and gold outperforming the S&P 500, they receive little attention due to their volatility and limited media coverage. According to Andy, that's by design.
Silver's up almost 50% this year, dude. And it's crazy that they don't notice that. And gold's up 35, 40%. It outpaces everything. Other than, of course, you know, the bang that we see in NVIDIA and Apple and crypto. It's funny, you know, you look at the Apple stock as an example. The day before it fell 16%, there was an article that said the prior week saw Apple as the largest benefactor of incoming retail buying. So the public jumps on board of Apple. It falls by 16% in the next day. Now, granted, it had a lot to do with the fight between Trump and Musk, but the point of it is that the public, the retail buying right now in the stock market is outpacing anything I've ever seen, at least in a very, very long time. At the same time, the traders, the big traders, are on the sidelines. Look at Buffett sitting on $500 billion in cash. Look at all the insider selling, 7-to-1 selling to buying. So the public is misdirected by the narrative as the big money, who I think has every vested interest in keeping it quiet and volatile. How many people even look at silver and it's outpaced the S&P dramatically, as has gold? But the volatility, the lack of information, the counterintuitive nature keeps everybody out. And I think people should ask a simple question. Of course, they would never ask it because they don't know to ask it. But who's buying our U.S. treasuries, and what does that mean? The answer, in my mind, is increasingly the U.S. government itself or the Fed. In June, the government came back and bought $10 billion in bonds, and this month, and a couple days before that, when the Fed is supposed to be quantitatively tightening, they came in and bought almost $50 billion in treasuries in 2 and 10 and 30 year. Why? Why does the UK and the Cayman Islands have to be the second and third largest holders, or second and fourth largest holders of our treasury? Do you really believe that the Cayman Islands is buying that much in the way of our treasuries, or Ireland? These countries, many believe, like Jim Willie, that are being funded under the table by the Fed to do this and keeping a peace. Now, that's supposition, but the point of it is that the big money that's been buying our treasuries for all of these years are moving the other way. I guess you could say dangerous. At the same time, the public is running into the stock market blindly, but yet it continues to move higher and to stay above. There's tremendous buying underneath the 200-day moving average. And I would say we're getting into that zone with silver now too. So you're not too late. I think, look at silver from an asymmetrical standpoint, maybe the best I've ever seen. Low downside, high upside. And here you have the biggest money in the world, central banks, and whoever they are on COMEX who's standing for delivery. They're very sophisticated, very well informed. Largest delivery in the history of the COMEX in the June or the May contract. Understand that that's very, very, very significant.
As the global financial system faces more pressure from rising debt, inflation, and growing distrust in paper currencies, gold and silver are quietly stepping back into the spotlight. More countries are moving away from relying on the US dollar and instead turning to gold, something real and time-tested that can't be printed out of thin air. Central banks are buying gold like never before, not just to diversify, but because they see a reset coming. Silver, too, is gaining ground, not only as a precious metal, but also because it's essential for products like solar panels, electric vehicles, and modern technology. As confidence in the current system fades, gold and silver are likely to become more than just safe haven investments. They may become the backbone of a new, more stable financial system. Do you view gold and silver as a form of insurance or as investments? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.